Hey all, welcome to this episode of A Good Problem to Have. I'm your host, Tyler Olson. Today we're going to talk about what a reasonable salary means within the confines of S-Corp election decisions. This is a really common decision point for you doctors who veer into 1099 work, or if you are part of a partnership arrangement wherein a substantial portion of your income is paid to you as a subcontractor. And even if you do have some W-2 income from a primary employer, your supplementary 1099 income may warrant a conversation around this. The reason why I'm honing in on the reasonable salary phrase specifically is because I wanted to be able to address the decision that you have to make as far as that's concerned, and the decision that you make about what your reasonable salary is within the confines of your 1099 business net income. It determines whether or not this is worth your while, worth your money, spending more money paying accountants and tax advisors, bookkeepers to go through all this, just to be able to try to save money on some taxes. The reasonable salary conversation is complicated because that's a bit of a nebulous phrase, and it's not quantifiable for everyone in the same way. Part of it is an understanding of how business works. Another part of it is one's moral compass. I'll give you an example. Say you're going to go work with a group that pays $1099, and they're going to pay you $500,000 for your clinical work, procedural work, let's just say it's about $500,000. But then another hospital in town offers you a job, same work, and they're saying, we'd like to pay you $300,000. And we think that that's reasonable. Would you take that job? It's the same work. It's the same amount of work, same amount of time. 300,000, you're like, well, no. I mean, the employer may say it's reasonable, and they're trying to get doctors to work under their system. But heck no, that's not reasonable. I'm not going to get paid 300 when I could get 500 working with this other group. But now you're with that group earning 1099 income, and now you're working on tax planning and strategies. And one of the things that comes up is you could elect S-Corp status by basically what you're doing is you're segmenting your income, or the business net income from your work and your association with that group, into two groups. One is a salary, and the other is profits, business distributions. And the reason why this all comes up is because the salary gets taxed differently than the business distributions. And the whole point of this is to ask how much of this pie, an entire pie of income, what portion of it can I identify as business distributions and what portion is salary? And the portion that you designate as salary has to be a reasonable salary. And there are a lot of docs in this very scenario who would then go and say, yeah, 300,000, that's reasonable. Do you understand the conflict here? Now, I'm not saying that everyone has to make the same decisions. I'm just saying that if you're a person that's going through this process and you're trying to decide for yourself how to navigate this decision that you can live with and that is worth your while, You need to be able to answer these questions and look yourself in the mirror so that you can enjoy your work, enjoy your life. There's a lot of loopholes like this in the tax code, and they exist, and I'm fully on board with taking advantage of what you can. I'm just saying that you need to make sure that you understand what you are doing, what you're agreeing to, and what conflicts exist when it comes to those decisions. In this scenario, then what you could do is like, well, the business net income that's payable to me is 500. The salary is 300 because that's what I've decided to do. And now you've got this 200 remaining that's going to be taxed differently. It's not entirely that simple, though. Part of it will depend on what you deduct. So, for example, when you've got this much income, it's often pretty important to set up like a solo 401k. And if you're making 500,000, if you do S-Corp election, how much you can put into the solo 401k is going to be dependent on your salary. So let's say you did 300,000 and you put the $24,500 employee contribution in. You can ratchet up to a total of $72,000 for the 2026 tax year. So you can plan to put 25% of your salary as a supplemental contribution or profit sharing contribution. So if you work out the numbers, that's, you would go well above the 72,000. You can't put in more than 72,000. So you do the 24,500, and then the profit sharing portion would be what would bring you up to the remaining, up to 72,000. Some also may decide that a cash balance plan, which is a type of pension, may be worth their while too. This also has administrative costs in the range of $2,000 to $4,000 per year. So it may not be worth it. The tax savings, the investment growth that's on a tax deferred basis, of course it has value, but how much are you paying in admin fees to maintain this plan? You need to go through that yourself. But the reason why I'm bringing these up is because those numbers also represent reduction in the net income of the business. So even in this scenario where you're making your business, your 1099 business, or let's say you set up a professional corporation, your PLC makes 500,000, 300,000 salary is your salary. That's an expense to the business. So the net income is now 200. And then you got to sort out like, well, how much are you going to do for profit sharing? If it's it's another almost 50,000. That's coming off of that $200,000 profits. Now it's down to 152, and then the profits go down further if you do a cash balance plan. And those you can often, between a 401k contribution, if you do the cash balance plan, you're not going to do the full 72,000 in the 401k. It usually doesn't work out that way. An actuary has to run the numbers with your age and your income and sort out how much can go in the cash balance plan and how much can go into the 401k. But collectively, it is not uncommon for those numbers to be north of $100,000 in total. So now your net income from this process is less than $100,000. And it's that portion of your business income that you're looking forward to having it taxed at a reduced rate compared to your salary. So it's not saying that you're not going to save anything, but if you're paying, say you're paying $2,500, $3,000 more in tax filing and accounting fees in order to do this. Well, let's say you got $90,000 in profit. The percentage difference, and I'm not going to go into the minutia of like the savings today. I didn't want to get technical, but the tax savings on the difference between if that 90,000 had been taxed as salary versus if it had been taxed as profits is it's dwindling as you deduct sole 401k contribution, profit sharing contributions, cash balance plan contributions, anything else that you deduct like mileage, home office expense. All those things are good reason to reduce your tax liability, but you could have done that without the S-Corp election and without all the extra work. You can deduct those things. So you really need to make sure that you're not just feeling FOMO when you look at what some of your colleagues are doing online or what they're talking about with their, with their businesses or their, their courses or whatever. You want to be very, very careful. Another thing you want to keep an eye out for is the expectation of like what additional state related expenses may be involved. So for example, Tennessee is usually the most commonly referred to one. So we'll just use that because that's a simple one. If you're in Tennessee, you're not going to want to do S-Corp. They have a franchise and excise tax of 7.5% on the bottom line of the company. So it's like what that essentially does is it completely eliminates the benefit of filing S-Corp, filing S-Corp status. So there's a lot of minutia to this decision, and you want it to be worth your while, worth the money you spend if you are paying other professionals, and making sure that it's something that's simple and you can sleep well at night, and it doesn't create like this monster of a business that could have just been very easy. So just keep that in mind. Another way of looking at it too, I can use myself as an example. I have this advisory firm. I have the capacity to hire other planners, right? So I also do planning work directly with my clients. In this arrangement, if I were to pay myself a salary, it would be based on my work as a financial planner for my clients. But as an owner of this firm, I could potentially also earn extra business income as a result of the activity of other people, other employees. That's a benefit of being an owner. But there's a clear demarcation of the work that I'm doing for my clients and the income that I receive as a result of training others and building out a business structure that allows them to also produce. And so that money, if I was going to file S-Corp, that money would be the business distributions, and my reasonable salary would be my work that I do as a planner. So as a doctor, in this scenario, you have to ask yourself, is what I'm earning, how is it really split? And that will help you to determine what your reasonable salary is. Talk to you next week.